Today, I want to talk about risk. Risk in general, I think in the markets, risk that I see in society, running a hedge fund always requires thinking about risks. And I think today is a good day to think about that. This is the Not Even Wrong podcast. It's August 31st, 2020. This is Krim Delco. For the day, the fund is up 32.5%. The market was down 20 basis points. For the year, we are up 251.5%. The market is up 8%. We're outperforming by 243%. So if on January 1st you put $100 in the S&P 500 and $100 in Orange Capital Partners, Orange Capital Partners would be up to $351 versus the S&P 500 would be at $108. So this is what it actually means in dollars. Our performance has been stellar, driven by Tesla primarily. We also made money with the CRISPR index and Microsoft. We lost money with our RTX options and our Intel options. The risk that we see in the markets, there are several risks that the markets are throwing our way. I would say right now, the situation, the environment is very benign for assets because the Fed is incredibly accommodating. The Fed has signaled last week at the virtual Jackson Hole meeting that they will go to a so-called average inflation target, AIT, which basically means in plain English that they will tolerate higher inflation until they think that the average inflation will be around 2%. And what that means for right now is an expectation in the market that we will have very accommodating Federal Reserve policy for a pretty long time. Low interest rates, liquidity, and whatever else is needed to keep asset prices from going up, because the Fed is not saying it, but the best way for the Fed to drive inflation is to drive asset prices higher, and that is kind of a trickle-down effect. It's not socially very fair, it's not politically very palatable, but this is how they think, this is what they do, and I don't care what they're saying. Of course, their language is very scripted, but this is in essence what's happening in the markets. And for assets, this is incredibly positive, particularly growth assets, particularly assets like Tesla and Apple and Amazon and all these growth companies, Salesforce.com, Nvidia, Square, you name it. There's a Zoom. I mean, there's a lot of companies. It's not just Tesla. There's a lot of companies that trade at very high multiples that have incredible demand, and it's driven by the liquidity in the market. It's driven by the expectation that asset prices will go up, and the first asset prices will go up are those which are the best assets, and then we will see a trickle-down effect. Maybe at some point real estate will also catch a bid, and so on and so forth. And this is how the Fed can maintain inflation. It's as simple as that. So we wouldn't consider that a risk right now. It will turn into a risk. I did some thoughts this morning. I wrote a column for my Swiss newspaper, Neue Zürcher Zeitung, where I outlined the actual risk that the Fed is running with this. It's not even inflation anymore. It is the stability of financial markets. So by definition, with this policy, the Fed is driving asset prices, and it's also turning valuation models upside down. So people have to search for new ways to value assets. Again, it starts with growth companies, but even real estate. How much is a house worth when mortgages are 3% and the treasury rate is almost zero, and etc. Like, how do you think about that? Those are conceptual problems, and we don't have closed formulas for that. We don't have answers. Business schools don't have answers. Financial economists don't have answers. The only answer we have is the market has to find its way. And the way the market works is it's like evolution. It's going to be very, very volatile, very aggressive. People will die, things will evolve, things will adapt, and eventually we will find some sort of equilibrium. Of course, it's not an equilibrium a la economists where you have, X equals something, but it's some sort of, maybe plateau is the right word. And right now we're in search of that plateau. So we will have more volatility, more insecurity, more instability. My guess is it's going to happen more in places like emerging markets, New York real estate, things like that will be very volatile. You have corrections up to 50%, and then you have maybe boosts again, and then another correction, like things like that. You might have that same thing in asset prices, let's be clear. I think it's very possible that, for example, our expectation for Tesla is that it will continue its rally to maybe sort of the 600 level, and then it could correct back to the 400 level, which would be a 30% correction. Uh, Absolutely, in dollars, that would be a lot, like 150 billion dollars at that point. I mean, it would be a lot of correction, but that's fine. And I think for us fund managers, we have to live with that kind of volatility when we're long an asset like Tesla, because we have a long-term view on the company. We believe it can be a multi-trillion-dollar company, and the month-to-month, quarter-to-quarter volatility, we just have to be able to stomach it. There's no other way. And I spoke about this yesterday in my podcast about the Confucius quote, people have two lives. The second one begins when you realize you only have one. That quote is so beautiful because it just teaches you one thing: survive, be robust, make sure you always survive. And this is the actual life that you should be living. Now, let's get back to the risks. I think I want to talk today particularly about the risks that I am actually most concerned about, and that is social unrest. The reason I think social unrest is happening is because the COVID-19 crisis is bifurcating society, it's bifurcating the economy, and it's bifurcating financial markets. What I mean with that is there are winners and losers, and it's very clear. The demarcation line is winners and losers. There's nothing in between. Look at the financial markets. If you're long Tesla, Apple, Amazon, etc., you are making money. If you're long everything else, you are losing money. It's not even you're not making money, you're losing money. The S&P 500 is up 8% year to date, and this is only because of the tech superstars. It is not because oil, industry, energy, I don't know, all these utilities, real estate, whatever else the economy has to offer is suffering. It's down. Look at the energy sector. The energy sector is on its knees. Bankruptcies are all over the place. And that is a massive wealth destruction that is just happening right now. And I think this will trickle down to the economy. You have the same effect in the economy. A lot of small companies, middle-class companies, a lot of, little guys, plumbers, whatever, restaurants, the guy who sells pots to a restaurant, the company which does design for a small fashion label which sells to maybe Gap. Gap's almost bankrupt. I don't know, like there is a lot of people that are losing out, and people don't like that. It's a very difficult situation. I know what the Fed is trying to do. I think Jerome Powell and the people there are not evil by any means. Their tools are simply, listen, let's pump money into the economy and let's trickle the thing down. Maybe everybody can take advantage of it. What's happening in politics, unfortunately, is much more aggressive. The demarcation lines are between left and right, between are you pro and against, whatever the issue is. And I feel we're seeing that. We had shootings in Portland. I feel more aggression in San Francisco. People are aggressive about this and that. And do you wear a mask? You don't wear a mask? Whatever. It just comes up. You have people are nervous. People are aggressive. It's not bad, don't get me wrong. San Francisco, where I live, is I would say, a relatively benign city given what's going on, also in comparison to New York. Mentioning New York is very bad. The violence there is very disturbing. I feel social unrest is a risk we as fund managers have to take into account for our portfolios, but also, of course, for our lives, because we don't want to live in a world where we are generating wealth and then we cannot be resourceful and do what we think is the right thing to do because we have literally blood in the streets. That is not a good thing, and we need to prepare for that. If that happens, we need to be somewhere where there's no blood in the streets, i.e., we have to go somewhere else or make sure we're safe. We have to safeguard our portfolios against risks like that. Social unrest can lead to political unrest, high taxation, economic decline. These are risks we are not used to. We haven't had it in generations almost. We have since World War II, we didn't really have an economic decline because of social unrest. Maybe in the 70s a little bit, but it's possible, and we need to be cognizant about it. And I feel, as a person, it's coming, and I feel like my only solution right now is Today I had a little incident. We were walking on the street. Somebody was giving us a snidey remark about not wearing masks. Me and my wife typically don't wear masks when we walk on the street. When we get closer to people, we put them on, and we also try to have social distancing as much as we can and all that. But we try to, if we have enough distance around people, we don't wear them. So somebody was just bullying us. I think it was a woman, maybe a homeless woman, doesn't matter. And I was thinking to myself, what should I do in a situation like that? And I think the answer is say, lady, I think the best way to deal with this COVID is to be kind to each other, first and foremost. We can have conversations about what to do and how to do it, but let's be kind to each other. Let's try to take this negative energy out of the situation. I've had some other situations recently where I've had some interaction with people, shady kind of people that are unfortunately coming out of the woodwork more and more, even in San Francisco. And it's always the same conversation, I mean, I'm a big guy. I'm a martial artist, so I'm not intimidated by pretty much anybody. And of course, my default move is never to get into a fight. My default move is to what's the word, to depress the tension, take it out, to de-escalate. That's the word, de-escalate the situation. And typically it works really well. You have a problem with somebody who's making some snidey remark, maybe using some swear words and yelling at you, and you just go and say, listen, guy, I don't know what your problem is, but I think we have better things to do right now. How about we try to be kind to each other? And it works. It works amazingly. I've had success with homeless people, with probably drug addicts, with shady people that looked like criminals that were just intimidating me, bullying me. I wasn't mugged or anything, thanks God. I'm just trying to give a picture of the kind of tension that I'm feeling in the street, and I'm offering a solution, and that is, let's be kind to each other. Let's show some love. It sounds esoteric. It sounds very Fruit Loopy California, but trust me, it's the only way. There's no other way. The other way, the weapons, the fights, the punching in the face, that's not a solution. It cannot go like that. It's not good for anybody, even for the people who think that they have nothing to lose. So showing kindness on the street level, showing kindness at higher levels, at the economic level, be ready to support communities that are in need, be open to companies that are maybe not profitable immediately but do good things, be more harsh on companies that take advantage of situations. Try to do the right thing. Do the right thing, show kindness. I think it's the only way out of this tension. And no matter who wins the elections and all that stuff, I think we as people on the ground, at the kitchen table, in our portfolios, in our daily work, we can make a difference by starting to be kind to each other and try to do the right thing. I'm not saying we should be pushovers. I'm not saying we should just try to avoid conflict. None of that. Actually, the opposite. Don't avoid conflict. If anybody bullies you, go in there, but instead of punching in the face, try it with kindness, de-escalate the situation. If it doesn't work, you can still run away or defend yourself or whatever. But try this. It works. It works much, much better than you might think. And I'm sorry, this sounds a little bit preaching now, and I don't want to be like that. The purpose of this podcast is to give people a sense for how it feels to run a hedge fund. It's not how to behave on the streets when you're in some sort of danger. But it's all interrelated. And I think what I experience in the street when I'm bullied by somebody could be tomorrow's situation when somebody's bullying me because I'm long a certain stock, and I can do the same thing. I can show kindness. I can say, you have a nice opinion, I have a nice opinion, your opinion is flawed on this and this point, and maybe my opinion is flawed. I will show you this humility, and I'm taking the risk to be long the stock, so please don't bully me, or something like that. Most of the time it works. And if it doesn't work, you can still just walk away or defend yourself with other means. So to summarize, I think the biggest risk we see right now at Orange Capital Partners, it's actually social unrest within the United States and also around the world. We think that the solution is to start with us, to deal with this problem, to show kindness to our surroundings. The solution at the economic level is to support whatever is the right thing and to be harsh with what's not. So if people try to, there are companies out there, like I'm going to name them, Uber, Airbnb. I don't think they're doing the right thing. I think they are trying to squeeze themselves into a market they don't belong, and they're using, in my view, very unorthodox and not very kind means. For example, Uber is just trying to squeeze out everybody and then raise prices to be profitable. That is not the right thing to do. The right thing to do is to do what Tesla is doing, which is through building an innovation stack, offering better products for less money, more value, better technology, solving big problems. This is the right thing. And I think we as a portfolio manager can allocate capital to those types of situations, and we can punish the situations that we believe are not the right situations. Thank you.